Hello, everybody. Welcome back to the channel. We are on episode number 131 of Palantir Weekly. On Monday, we are entering into one of the most consequential earnings for Palantir, which is going to be their Q2 2024 earnings. Amir and Arnie, are you hype?
Yeah.
Yeah, as hype as can be this early.
For
I
context,
was
it's 4
going to
a.m.
say
where they live.
exactly
So.
these same words.
Yeah, they're trying to wake up a little bit, but they're here. They're going to give us
But
some
here we are.
some good Palantir analysis. Before we get into it, first, one quick thing I want to do. Amir doesn't know I'm going to do this, but we got to do this. Congratulations to Amir for 1,000 subs.
Yeah, all thanks to you too. Actually, I was gonna make a separate video where I just credit you two, like really, both on X and on YouTube. I think a lot of my growth is thanks to you two, so I'm really grateful for that and for all the 1K subs, all the positive comments for all my videos. And my way of giving back to you is to give you my Palantir DCF model for free. So it's the latest video there, as you can see. Go grab that. Why not? It's free.
I think, first of all, this is a big achievement. And although he credits Arnie and I, at the end of the day, he's the one making the content, putting in the work, uploading, making the thumbnails, learning how to position Dan Ives and Elon in the right place so that people click. So first of all, really big congrats. Building a YouTube channel is hard. Building a brand is hard. Getting people to care about your opinions are very difficult. Amir is a father as well, full-time job. So obviously he has other responsibilities. So 1,000 subs, that's not a small deal. And the cool thing is... Go ahead.
Just short for everyone watching here that does not create content, like it is hard. Like it is difficult to stand in front of a camera, to speak, to create so much content like Amit does, like day in, day out, to think about what thumbnails, how to tag the videos, like when to post. Like there's so much, like it's not easy. So since I started trying to do this, I have a newfound respect for these two that have been doing it for so long.
And you see how easy it is to criticize compared with trying to do. But this is worth not only in terms of content, also in terms of everything. Because remember how easy it was for SaaS experts to say, oh, yeah, Palantir, everybody can do that.
Yeah, it is very difficult. And the cool thing is with content, again, as hard as it is, we're living in an age where content is currency, meaning attention is everything. And it's infinite, right? You're never going to get 8 billion followers, but theoretically, almost everyone's on the internet, and in the next decade, everyone will be on the internet. So you could get that many people to care. So once you start, the growth is quite literally infinite. It is contingent upon how much work you put in. And Amir's putting in a lot of work. And so in the next 5 years, we'll see where this journey goes. So awesome stuff for Amir. Let's get into Palantir. Dom just texted me. I'm going to send him the link. He said he's free, so we'll bring him on. We're going to go through a lot of numbers and slides, guys. But before we get into that, I want to do raw thoughts going into earnings. Obviously, markets have taken a little bit of a tumble. NASDAQ down 10%. Palantir down, I think, 15% in the past week. Arnie, what are your thoughts on Palantir price action? And what are your high-level thoughts going into earnings?
Well, let's focus first on the things that matter. So not the stock price. What is the context right now? What we are seeing is after many months, like a year now, that everybody speaks about AI, we start seeing who actually delivers and who doesn't. The big bet we are essentially making as Palantir investors is Palantir actually works. Palantir actually delivers value in AI. And we are seeing exactly in these last earnings calls that are emerging how sensitive the market is to this concept of, okay, you spending billions and billions and billions in CapEx, but is that actually worth? That was enough to trigger an hysteric reaction on Google under the impression of, oh, we are just throwing too much money into AI projects that we are not really sure they deliver, but we can't really miss the opportunity to invest. So we'd rather overinvest rather than underinvest. And with software companies, all the attention will be now, okay, is AI actually a tailwind for your business? Do you actually deliver something? Are actually customers happy to pay you for this something? Or you're just bullshitting us and you don't deliver? So the big bet we are making is Palantir delivers. And fortunately, with our awareness of these months, of covering the company very, very closely, I think we can all be confident that Palantir actually delivers. It just needs to be discovered.
Awesome. Amir, your raw thoughts going into earnings.
Yeah, just to continue where Arnie left off, I don't think there's any more room for fluffy products with buzzwords. The economy is getting tougher and tougher out there. And as CrowdStrike reminded us of the CARP interview, where you can't afford a PowerPoint when your life is on the line. I mean, I'm expecting a lot of lawsuits coming CrowdStrike and potentially Microsoft's way. So I think we're entering an era where people are starting to understand that they actually need to start to deliver outcomes for all the capex spent, and that's great for Palantir. I mean, we went from a time where clients were embarrassed to be, and not embarrassed, but they wanted to use Palantir, but asked to remain anonymous. Do you guys remember that time? Because Palantir was so controversial. And now we have Microsoft shouting out Palantir in particular, being proud that, oh my God, Palantir is an industry leader that's using our models, stuff like that. So I think it's just increasingly piling on and compounding for Palantir. And as of expectations into earnings, I know that the comp year, the comparison period, Q2 of 23 is very weak. So we should see some interesting numbers, especially in the US commercial. If you remember Q4 of 23, where they're like, we grew 70% US commercial. Well, there's a big potential for that for Q2 as well, as we will get into later.
All right. Dom, Matt, we're just doing raw thoughts real quick before we get into a lot of numbers and slides. So Dom, back on the show. How you doing?
Doing good, man. Doing good. Been working hard out there, and I'm glad to be with you guys before earnings.
I love it. Raw thoughts before Monday on Palantir.
Yeah, I think there's been a lot of articles that have been driving the consensus of this being a very critical earnings and being an inflection point, right? Wall Street has been punishing anybody who has missed, or even if they've had a good earnings, if it wasn't a blowout, seeing that decline. So I saw some people saying buy the dip, and I would say yeah, I think we may be getting a good opportunity unless they just provide stellar, just unexpected, real big growth. I think we might see it, either stay where it is or come down. But if they do have a really big beat and they can talk more transparently about boot camps, everyone that I've seen writing in the analyst community wants to know about boot camp conversion rates. I just don't know if they're going to provide that data yet. I don't think it's been long enough for them to sit there and start giving data that people can try to build models off of.
Okay, and Matt, your raw thoughts going into earnings.
For sure. I mean, I think lately the last buzzwords for 6-12 months have been AI. But I think at the end of the day, people still need to recognize that Palantir is a fundamental software organization that is really just trying to get people in the right direction. I still think that there's too many companies out there that have disparate data systems that don't communicate with each other, legacy applications that don't communicate with each other. And it would be just a stair step in the right direction just to get Foundry or Gotham in their organizations before you even talk about AIP and the implementation that in the success of implementation of that would have in their organizations. So I think that there are some companies that are prepared for that AI part of what Palantir is providing. But at the end of the day, this is such a leap in the right direction towards just what 21st century computing can be all about. And I still don't think 95% of the organizations out there have even gotten to that place. So I still think while we might be talking about, AI and how that's the frontier, there's still so many companies that are still in last century that need to be brought up to the 21st century before they can even start thinking about AI. And I think Palantir is in the right position to help with that.
I was smiling because Matt is so spot on. Like, I'm living and breathing that daily in my job, and it's
awful.
And I always like to ask every potential customer, I was like, "Have you heard of Palantir?" And I'm just blown away with how many people have not heard of it. A few of them have said, and these are large enterprises. Some have said, oh, it's that black box government company. And I'm like, no.
Well, this is why the Palantir employees like Chad and Iliano are on Twitter, and they're trying to change the narrative.
Unfortunately, not all the major decision makers and things are going to be looking for their IT purchasing on Twitter. But I am super grateful for what those guys contributed in the community. I see it on LinkedIn more and more. I see it on YouTube. I think they just need to double down in that area, quite frankly, because to Matt's point, like when I start doing my little Palantir spiel with customers after we're done talking about my company, they're just like, "Can you send me some more information on that? Like that's interesting, And it's they're so far ahead, like I said. So we're gonna just. I wouldn't be surprised if we see this 20%, 25% growth for a while, and then an exponential jump eventually when the click happens. But even if they can just keep at that 20% clip, I think they'll be okay.
All right, so we got some numbers. Amir, can you share your screen? Try to zoom into it. We're going to take it slide by slide. Amir, you can give us your take once you introduce the slide, and then I'll go around the room if anyone has anything to say on the slide, and then we'll move.
Yeah, I would love to hear your guys' thoughts. So instead of like putting out my exact expectations, I made a minimum base case of what I expect. So this is like the bare minimum. And the interesting part to all of this is that it still beats Wall Street's expectations. So it will get interesting to hear what you guys have to say. But I prepared some charts that we can go through and the compositions behind that. Can you see this? Am I sharing?
Yes. If we could zoom in just a bit here.
Why is it?
Yeah, why is that black space? That's weird.
Why is that?
It's better when you.
Why can't I?
This is what? This is Excel?
Yeah. But like I could do.
This is why Microsoft collapsed on earnings.
Yeah,
in Excel.
Why is this so bad?
Say, why is this in Excel?
Why can't
hold on? Zoom in. Even if it gets smaller, zoom in. Keep zooming.
No, but like it won't extend to that part. Let me just restart Excel quickly.
I mean, it looks fine on my screen.
It's not good.
Okay, while you're
talk among yourselves.
Okay, yes. While you're restarting, let me ask this question to you, Arnie. Macro took a big hit. Jobs data, unemployment, yada yada. Let's say Palantir crushes. Do you think the stock has potential in this macro, even if they have good earnings? You're muted.
So, if I understand correctly, has Palantir the potential to crash even with good earnings, right?
Yeah, can the stock go up if the macro looks like we're headed into?
Okay. I would argue that is the ability of Palantir to deliver well far outpace any macro bullshit. Like you don't see billionaires doing macro unless they sell funds.
I love when you curse on me. Like when you curse, like it's the best thing.
Well, with macro boys, I'm tend to be very aggressive because we have been completely bullshitted for many months in 2022. Oh, recession, boom. And now one day the economy is doing great, and the other day now we're in recession. Okay, fine. Let's assume we're in a recession. Is that a reason to sell Palantir, or actually that could trigger even more interest for Palantir because the business doesn't grow so much in terms of revenues. The cost could be under control if the revenues are not strong enough. Maybe I should deploy software to actually help me in both directions. And I would argue that is the most important thing because you know that I like to track ServiceNow results, even if their offering is relatively weaker, the product is not exactly the same thing. But I would argue the dynamic is very similar because what they are claiming to do, that's actually how now they're selling themselves, is we are an operating system for the enterprise. We are the defining operating system for AI of the decade. So these words sound familiar. And what we're really trying to do is literally trying to build a platform that on top you can keep building stuff. And now they're very proud of the AI offering, which is, by their words, selling wow. But at the end of the day, if you look at what this offering actually is an AI chat, augmented chat. While we know that Palantir goes way, way beyond that. And the ability already of ServiceNow to deliver good numbers, it grew around 23% while having very strong margins. And by explaining the narrative that they're getting a lot of new deals from this AI offering, that is what made Wall Street super excited, and the stock went up in a day where everything went down, and it went up like 10, 15%. That was already enough. And that is what makes me very confident on Palantir, because what the market really wants to see now is, we have been told about AI for 1 year. Now it's time to show real use cases from big clients that you are delivering AI. And actually, I would argue no other company like Palantir can deliver so many use cases.
Right. Yeah, we'll talk about kind of where AI fits in the narrative of earnings as well. But all right.
I got a question for you, Amit.
Yes.
I was reading your posts on X, and you asked if people were buying. I bought some more today. I split because I didn't want to get greedy. I was like, you know what? They could even have good earnings and it still go down even further. So I did half my purchase today, and then I'll do my other piece on Monday. But I saw so many people posting about, well, if it gets to 21 or 22, I'm loading up. And I'm like, what's the difference between 24, 43, and 22 when if you have a long-term horizon? I mean, it's going to be negligible if you're willing to hold these for the next 5 to 10 years. I get wanting to have the best price, but I've just been burned with Tesla and even Palantir at times where like you try to get the ultimate best price. And if you would have just dollar cost average just consistently, regardless, you would have gotten a better price.
So, sorry, a slight angle. What is the obvious price, in your opinion, that would make people too easily confident into, oh, this is a bargain?
I mean, I think if it goes to 20, people are just psychologically just going to load up.
Yeah, I was going to say that as long as they see like less than a 2 in front, then people like psychologically, oh, it must be a great
I was going to
deal.
say 19, yeah.
Yeah, I agree with you, Dom. I think long-term, 24, 22, there's not a big difference. Even 27, if the thing's going to 250 in a decade, it really doesn't matter. But I think this is what a bear market does. I'm not saying we're in a bear market, but if you get a little bit of bearishness, when it comes down to buying the dip, right, it really tests who's ready to buy, right? So I didn't buy more Palantir today because I have a Palantir position. I bought a lot at 21 when it fell after Q1. But Robinhood is down almost 12%. I was like, all right, I'm buying more Robinhood, right? I believe in this, so I'm taking advantage of that. But it's tough when you have a big conviction and you have to average up. You know, are you willing to do that?
Well, look at Tesla. I mean, I was getting greedy. I was adding a little bit at 160, a little bit at 180, and I was like, it'll come back to 160. And then that thing went up to 250. I'm like, WTF?
Right.
And so
it's very hard to manage to time it.
You know, now it's back down to 207, so got some more, but. Yeah, I mean, if you really believe, I feel like if you look at the charts, and you got Arnie, you're the technical guy here, and same with Amir. There's like a coiling, right? Have you seen like just how we've been sitting in this band of pricing for Tesla and Palantir for so long? I would have to think eventually, a year or two from now, you get that big rubber band effect, but I could be wrong.
It's funny because
me and Arnie are. Did you say that me and Arnie are the technical guys? I have never opened a chart in my life.
Oh, okay. Well, I saw the graphs. I figured, oh, maybe he does technical.
No, Amir prides himself on. He probably didn't even check his portfolio today. He probably didn't even look at it. All right, let's get into this. Amir, what's the first one we're looking
better,
at?
guys. Can you see? Should I?
Yes, this is good.
Okay. So. I want you to keep in mind that this is still higher than Wall Street expectations. So this is like a minimum level, I would say, and I will explain.
This is revenue
why.
growth, right? This is revenue growth.
Right. So there's a title everywhere. I've highlighted the latest quarter, but when I do this, I don't start from like, well, I expect this revenue. I do a bottoms up approach where I look at like, okay, how many customers will they grow? What are the implications of that? What does that mean for specifically US commercial and stuff like that? So I don't start off by like the top line number, but I guess we will get there as we go through. So first of all, I have the revenue growth at 25%. And if you look at the Q2 of 23, it's a very weak comp And if we just quickly go to the next one, we will see, if you look at where my mouse is here, this is Q2 of 22, which was a weak comp, roughly flat going into Q3. But if we look at Q2 as well here, it was roughly flat for US commercial. The dashed line here is US commercial, and this one is not US commercial, sorry, commercial and government. But you can see here that commercial barely grew into Q2. So the comp is very easy to have a strong growth rate for commercial. So while this might look like, yeah, we finally get 25%, it's a very, very weak comp going into Q2 of 24. But I'm
meaning if we CAGR 25%, which is your 665 million, analysts are expecting 650. You say even if we get 665 and we beat, it's going against the low comp from last year.
Yeah, I was gonna say that the expectations from Wall Street are 652.4, and my minimum base case is 665. And the main reason, if we just go into quickly here, this might look, most are cleaner than this, but I wanted to capture government, which is the normal line here. And then we have commercial on top, which makes the total. Yeah. And then we have the blue line is the year-over-year growth rate for commercial. If you look, it's almost 40%, which will look great when they present. If they can reach 40% commercial year-over-year, it will look great. But actually, it's not that strong because the comparison period is so weak. And then I have the government roughly declining, not continuing the trend upwards, but staying roughly flat. So I think mostly the growth will be driven by commercial in terms of percentages to make up this 665. So I'm curious to see what your guys' numbers are for the base revenue count.
Okay, let's start with
to go first.
Let's start with Dom, then Arnie. Dom, your thoughts on if 665 is reasonable for this quarter?
Yeah, I like that. That right under the 25% growth. I would be shocked if they hit over 25% revenue growth. I like the breakdown that you showed too of government. We know that September is their big spike, right, with the government contracts and things opening up. It'll be really interesting to see next quarter what they capture from government to see if that pivot changes, that inflection point, and how you're going down right there on the purple line.
So just to quickly show that we had a similar, if you remember Q4, they were yeah, we grew 70% US commercial. But if you look at the comp here, it was actually growing negatively, minus 12.5%. And we have a similar one here where the comparison year is also negative in growth by roughly 4%. So they will have a similar 60-ish% or more year over year. But I still expect the quarter over quarter for my minimum base case to be roughly flat. So we're not really seeing the AIP revenue scale yet, as we've talked about. I'm not sure when they're gonna hit the start pouring oil on the fire for the all the bootcamp results, all the AIP actual monetization. But I still expect it to be roughly flat here. Still, but the year over year will look great because the comp is so weak. Sorry for cutting you off there.
No, okay. You're fine. I mean, I think the weak comps, yeah, they obviously make things bigger layups. But I think when I look at this and I zoom out, I just look at that trend, you see that stair step that's going from the left to the right, and it just keeps going up and up and up and up and up. And so, granted, that's only, I think, 4-year span there. But if they keep doing that, I mean, that's what the great companies do, that regardless, they pivot, they fiscally responsibly figure out how to make sure they keep showing growth. So, I mean, I think this just shows they know their business very well, and it's headed in the right direction. It just may not be as fast as what people want it to be.
Arnie?
Well, I was thinking the guidance the company provided is more or less in the 22% growth. And typically, they tend to outbid it for 1-2%. So that's the basis that tells me, okay, this potential 25% growth fits into the grand scheme of things. And I would say that this dynamic of the base effect is what made us careful before the last print, because we underscored that 70% was great, but it was great on paper. The normalized number was more in the 40% line. But look at the trend. Like if we normalize that US, could you go down to the US commercial growth? I think let's cut that 70%, which was a bit like too much. We can clearly see that they are sustaining a very high growth rate north of 40%. And the company itself, in the last earnings call for the guidance of 2024, said, we expect US commercial revenue in the excess of 661 million, representing a growth rate of at least 45%. In other words, if in Q1 it was 40% and more or less, we can argue, okay, at least 40% also in Q2, they mean they do expect a very strong growth rate for also Q3, Q4. Otherwise, you don't keep up with this 45%. And now we are getting so many deals. I made a tweet the other day showing like a glimpse of how many deals we actually got. And the deals, like few deals that is worth mentioning this quarter. Like we got the effing Maven, which is the most important contract in the space for AI. Maven is AI targeting, essentially. We got an extension from Tampa for 7 years, $50 million. So that is huge because Tampa is one of the leading hospitals in the US, and their expansion after relatively many years is actually a very powerful signal. Oh, this stuff works. And then we got many smaller deals, but look how many stuff happened in just one quarter. All this stuff sooner or later will catch up. And once these clients are acquired, when these partnerships are made, then it takes time, but over time things emerge. So I think what is really important here is not much if a growth rate is 22 or 24 to 25%, is taking care of the narrative. All the narrative now is focused into these numbers, US commercial, because here is where the explosive growth can really happen. But why? Why also the Knives keeps insisting on US commercial? Because this stuff is literally where all the richest and most reactive companies are going to throw billions into evolving their AI strategies. So if Palantir can show that even in a weak context of enterprise software, and this is the context, sorry if I spam a little bit, but this is the context where we are in. The SaaS industry still has slowing growth rate, with now even declining margins after
we're getting to the rule of 40 later.
And right now Palantir is showing exactly the opposite, expanding while accelerating. So given this context, this is the really best opportunity for Palantir to show, okay, we are made different. We are not a SaaS, we are, as Chad said, a SaaS 2.0.
But you know, just the main part, because I think we all agree that on a broader scale, things are really looking positive. But if you just look at the implications of the Q2 earnings here, if you remember all the hype generated by this 70% number in Q4, if they can have another strong number like that just to showcase, like let's say a 60%, which is still relatively weak, I would say that 60% is like really, really easy to show this quarter, then just imagine all the buzz it generates, all the positive hype and momentum for the stock potentially. I think it would be huge to present a number like that as your headline.
Yeah, frankly, I didn't notice that the Q2 for 2023 was that low.
Yeah, and most people didn't even care about Q4 of 22 when they posted 70%. So I think, like, in a broader sense, for investors out there, for CNBC, for all these outlets, just seeing that will be like a really strong signal and give a lot of attention to Palantir. But I'm curious if anyone else has any thoughts on like the base
Yeah,
case revenue growth.
let's get Matt in this. Matt, what do you think the growth rate looks like, and do you think it matters if it's 22 versus 27% this quarter?
I think it'll matter because I think if you think about where 22% lies, that lies within Palantir's kind of expected range that they gave at the end of one quarter. I'm firmly kind of just looking through the numbers myself. I think revenue will probably end up between 650 and 660, so that gets you about a 22 to 24% year-over-year growth. But directly answering your question, I think if you see 27%, I think that'll definitely ignite the fire under some people's bellies and really try to understand, wow, what's really driving this? Because we haven't seen 27% in quite some time, right? It's been over 2 years at that point since we've seen that sort of growth. And so that's definitely going to be a continued reacceleration, right? Because we've been able to see basically over the past year going from a 12% year over year now to 27%. It's going to get people's ears perked up to say, well, what am I missing? Especially the folks that have been kind of putting downward price targets on the stock. What am I missing that, I'm starting to realize, like, the train's leaving the station, and did I make the wrong decision by selling out earlier? Did I make the wrong decision, saying that Palantir was kind of a dead company that wouldn't get to its targets? So I think 27% would definitely show up very, very differently than, say, 22 to 24%. And I'd very much welcome it, but that's that. I personally just think that the adjusted income margins as well, I think that they forecasted that they were going to be anywhere between, like, what? Let me just double check. They said that they would be at between 209 and 213. I'm kind of thinking on the upper end of the adjusted income of operations for them. I'm thinking more like 211 to 224. So that would get them kind of like a 32 to 33% margin off of that 650 to 660 in revenue, and then ending the quarter with about 4.1 billion in cash. But I know I'm answering a little bit more the way you had already asked.
Okay. Next slide, Amir. You're muted.
Yeah, sorry. So as I mentioned, I don't start with the top line, but I look at the composition that would make it up. So the next one is about the customer count growth. We can maybe start with the total one. Here we also have something that might look a bit messy at first, but we have the net increase for this quarter, which is the number here. And then we have the total down here. So that's all you need. And then we have the growth rates. So the blue line is year over year, and the purple line, maybe it's not too. Maybe I can change it to something more visible.
So you're projecting 600 customers, 42% year over year customer count growth.
This is the bare minimum, which would make up the revenues we just saw. So on the total, it would mean simply keeping in line with the previous quarter in terms of growth rates. You see that we grew around 42% year over year last quarter. Maybe I can just go a bit to the right to center to more pleasing. But we actually see a decrease in quarter over quarter. But I think the main one to keep track on is the US commercial customer count here. And going against the weak comp, as we talked about, that would also mean a slowdown in the customer count growth, because we saw, like, with the introduction of AIP and bootcamps, if we look at where my mouse is here, Q2 roughly is when we started to run bootcamps, and then we saw a clear upward trend in the customer count growth. Like, we started to scale up really quickly, even though we didn't recognize revenue on the back of this. We know that revenue will eventually come. We know that clients typically scale up their spending over time with Palantir. This whole scaling phase, expand phase that we've talked about so many times. But then we saw a small decrease in Q1. And then if we have another decrease to reach the kind of weak revenue growth, because I was really shocked by the guidance, as Matt mentioned. Like, the guidance is so weak, the Wall Street expectations are so weak. So in order to reach that would mean a severe slowdown in the customer count growth. So I personally think that this is way too bearish. I think we're gonna see stronger customer growth than this for Q2, especially now that we know that they have kind of solved boot camps. If we look at like Q4, they like doubled the amount of boot camps they ran in Q4 for Q1, and then doubled it again if we are to trust the AIPCOM numbers. So we know that they're really scaling up how they're doing boot camps, how many clients they can fit in. So this would be a disappointment, but this would have to be roughly what they're gonna do if we are to believe that like this revenue number is some sort of truth, because that's why I think like 25% is not hard to reach this quarter, because it has so many implications that US commercial like is not scaling up quickly. So this is like the base minimum case, I would say.
To complement exactly what you said, consider that this chart with the expansion up to 295 looks very reasonable given the trend, and given our qualitative information, given what we are seeing emerging in terms of brand appreciation, the speed of bootcamp, the feedback, all this stuff. I would argue this number is reasonable, and this 295 would mean a growth rate over year on year of around 80%. Just to give a context, imagine that super bear case, we stand at the same growth rate of clients of 262, but it's already 60% year on year.
Like, let me just borrow this quickly. Look at pre-boot camps. Like, look at this.
Yeah, it's obviously it was horrendous compared to
that.
Yeah, the year over year numbers that they will be able to say, like it's gonna be insane. Like pre boot camps, like I think still 295 is like very bearish, I would say.
Look at this, where I removed the SPAC impact, because we know in 2021 the clients acquired number was dirty because they essentially bought and acquired many customers with SPACs. But let's exclude that. We can clearly see exactly what you said. There's a Palantir before bootcamps and a Palantir after bootcamps. And now we are in the third quarter, where I personally expect at the very least, other 50, 60 customers.
Dom, your thoughts on customer count?
Yeah, I think those are very reasonable, and we're like Arnie said, the trend is it lends itself to keeping that. I think what's so fascinating about how they run their business is they don't try to overstretch themselves just for the sake of growth. They're very focused on customer value and customer outcomes being actually reached and realized. So the ROI is unarguably there. And that's when you see that expand phase, when all of a sudden they land these big contracts. You look at the 5-year contract extension they recently got. They just had the big partnership. We don't know how much it was worth with TES for the energy. So it's just, your graph illustrates it right there. Pre-boot camp versus after boot camps. Like, they have figured out a sales motion that will continue to compound more growth, and it will get bigger as more hear about it. And I think they're also always trying to figure out how do they do less with FTEs. Arnie had a post out there that said, hey, there were some customers, or there's some sales reps with Palantir saying half of my customers don't even use forward deployed engineers,
Okay.
So
I have it here. You can share it.
Yeah,
I have
right
a
here.
question for Dom too after.
So they're aware of where their weaknesses are on, like, how to get adoption faster. I mean, that's why they came up with AIP boot camps and capitalize on the AI movement. Um, and I just think they're going to keep optimizing. I think we don't give them enough credit, Karp and team, about understanding, and Sham, the fiscal responsibility and understanding, like, how to keep customers and expand. They've been doing this for over a decade now, and customers, our top 10 customers, continuing to spend more. That normally doesn't happen for an entire decade. Like, the things that they're doing, and why I invested in them in the beginning is still so in play, is that they're doing things customer first, and they're so focused on that they're confident they'll get their profits later in the back end, which is really refreshing to see for a company to do that.
And we also know that others are starting to imitate Palantir. For example, we know the Snowflake hands-on thing with Microsoft. But I have a question for you, because only using Palantir personnel for boot camps was never like infinitely scalable. But we also know that they now, or I don't know if they have begun using it. I don't know if we have confirmation, but we know that they want to use their consultancy partnerships like Accenture, PwC, and stuff like that to run boot camps as well. You are in sales. Like, how much more difficult, or is it easier for a consultancy to run a boot camp and sell the product to a customer, rather than, because there are two dynamics to this, I imagine, just like speaking out of my bumhole. But first, when Palantir tries to sell you something, it's obviously like the company is trying to tell you, like, our product is the best. When it's a partner but not directly Palantir, is there like a more genuine feeling to it, or is it more like, we don't want someone else than Palantir to present the products? Like, can you speak a bit about how the sales?
I can definitely tell you, because I've spoken to people at Palantir. They are very touchy about who gets to sell their products, and what channel partners can be a part of that. I think they make sure they do a good job of vetting. If you're going to be a partner kicking off a boot camp, then you really have to have some technical prowess and have some good SEs that can do a great job and don't make the company look bad. I'm sure they probably do this, or I guess they would, but like maybe have like one teach the trainer type person, like an expert SME from Palantir, to sit in on these boot camps that they're hosting. That's how I would do it, just so that way if anything goes wrong, they can step in and make sure things, still get delivered and there's still value there. But I think they're realizing internally, like, they can't do it their own forever, and they're starting to, I'm sure they've been pouring into these partners for some time now to get them up to speed. And so I think we will see more Accentures, Deloitte's, PwC's doing stuff like this. And what a great profitable way to do these than hire a ton of employees where you got to pay them all this other stuff, right?
Yeah, and I have one last question on that as well, because I've been thinking about this and I can't really make sense of it yet. Like, we know that it's really, really effective now. It's a way to get a lot of people really quickly to have a session with Palantir to see like what impact it can do, like in a 1 to 3 days kind of session. But for how long can they do boot camps? Because one of the main reasons I would imagine you do boot camps is just that, like, to get it into the hands of people, to show them like, this is how quickly we can deliver outcomes. But how long do you need to do boot camps, and how much can it scale? Or does it just reach a point where like people know what Palantir is, they know the outcomes they can expect, so there's no more need for boot camps? Like, how far into the horizon can they keep scaling boot camps is my question.
I mean, that's a question for Karp and Sham, but what I would say to that is they've created the developer boot camp now. You see them trying to push further and listen to CodeStrap and others about the importance of embracing the developer community. I think we're far off from people all like, just you say the word Palantir and everyone knows what you're talking about. So, I mean, for now, I think what's so admirable is that their product is just so good that they can literally say, yeah, bring some production data and you're going to walk away in 5 days or 3 days with an MVP product that's usable. There is no one in the industry who's doing that and backing it up and showing ROI. Like, it's just bonkers on how well this stuff works and how fast they can get people off the ground. But I do think, like, you're starting to see them think about, like, I think now you can swipe a credit card and just try Foundry out, like on the developer bootcamp site and all this other stuff. So I think they are getting that to where it's going to be more consumable faster and not need boot camps. But I don't think that happens just right away right now.
I think the answer lies into this slide that I was sharing, the LinkedIn post. Can you put it again? Sorry, Amit. But where the Palantir employee said, "We are not a consulting company. Is a SaaS solution that has been historically delivered with forward deployment engineer, meaning our guys go literally with the clients to build, like what Chad said, eat pain, excrete product." And however, here is the most important sentences that we just found. Half of my clients implement 100% of their solutions on Palantir software, their own solutions on Palantir software, meaning where they are self-sufficient. Half of the clients are self-sufficient right now, and over a third of this Palantir guy never had Palantir implement work for them, meaning we didn't really need forward deployment engineers coming to deploy Palantir. We just deployed our team to implement everything. And that's something peculiar that tells us that what Axel Springer did last year or 2 years ago, where in the video I explained we implemented everything on our own, is becoming more spread. With AAP, it seems everything could be easier, even from stupidly as a Q&A session with the chatbot is, okay, how do I actually do this? With GenAI, it becomes increasingly faster. The question is, will Palantir stop hiring FDEs? I don't think they will delete FDEs. I think they will remain a core component of a business, because of also how Chad explained into our spaces the other day. FDEs are the way Palantir actually builds software, and the way Palantir becomes a better software that learns how to build on the need customers have. So the way Palantir is ahead of competition is exactly thanks to FDEs. So I don't think they will cut bootcamps or will cut FDEs anytime soon. I just think that in the mind of Carp, the company will keep growing, but the number of FDEs will be relatively constrained while increasing the scalability of the product. So what we are seeing here, like from this slide that I just shared, is now more customers are deploying Palantir without the real need of FDEs, but FDEs will remain a core component for the business.
Yeah, and Chad's in the chat, so hopefully he can chat on this assumption here or tell me if I'm wrong. But to your point, Arnie, with these FDEs, they're building software based off their customers' feedback, and that's what you should do. Understanding the problems in the industry then allows you to create solutions in your software that is industry specific and is not just solving for one customer. I know Matt's shaking his head because he works in a specific industry, and Palantir has solved some of those specific industry problems. And so as long as they stay with developing and learning these use cases with these FDEs, the FDE is always going to be super valuable. And it's like a cheaper way of really finding out what your customers need.
So yeah, I just want to touch on that a little bit. I mean, I agree with you 100%, Dom. It's the FDE isn't there to hold your hand throughout the entirety of the contract. The FDE is to exactly do that, understand the needs that you need and where your problems truly are to help establish your, at least this is my experience with Foundry, going on 5-6 years ago. they came in, they said, what's your problem? They try to instill and understand the culture within your organization. They try to gap it to their kind of culture and understand really where you are today and what you're thinking of data is, and how moving it towards how Palantir understands how data should be within, you have it within your disparate data systems. Palantir says, this is where you are. We want to gap you and bridge you to over here. And really, that's the job of the FDE. Once you have that sort of established and that framework kind of established, it's up to your internal organization, I think, at that point, to continue to build. At least that's been my experience with our organization, getting people with competency to help build applications within the organization. It's not up to Palantir at this point, 5 years on, with the contract that we have with them, to continue to build these things. We might consult them, and we still have people tagged to our organization that we can consult with, but they're not flying around and coming to our offices every week like they were 5-6 years ago to help establish the initial framework that we had in the organization. So I anticipate, because we were one of the first few commercial customers. I assume that's probably how they've continued to do that as they've gone to work on with GM and many others. And so I'm curious, I'm sure Chad will be able to help establish that sort of thought as well. But it's really into helping that organization or that company realize and get them to where they need to be compared to where they have been.
Mm-hmm. So the straight question is, do you expect, or do you think Palantir should reduce the number of boot camps in the future, or just keep rolling?
Well, what would be the reason to reduce it?
No, I think the core question is, for how long is there a need for it before it's not the most efficient way anymore? Because just to recap quickly, we know that Palantir's main goal is to build an industry operating system. And in order to do that, to my understanding, the core use of FDEs was to have people on the front lines. Because if you listen to Carp speak, the Palantir team speak, it's a lot about being on the front lines, both in actual front lines at the battlefields, but also like at customers, to understand the issues they are facing in different industries. And we spoke about this, I don't know if it was last week with Matt, where I asked, like, okay, we know that Palantir built a solution for the company that Matt works for specifically, but they're also partnering with a lot of different companies in the same industry, where they solve the issues that company had, and then they redeploy it. Like, how does that company see it? Like, is it a problem, or is it mutually beneficial? So
so why would boot camps ever? I feel like it should only keep going. It should only be increasing.
Yeah, but if you look, why do you need boot camps, which is the main question? My understanding is that they needed a way to get it into the hands of people, to show the impact that Palantir can have, and how quickly you can reach outcomes.
Well, I can tell you why boot camps are still needed, because the people interaction, the person-to-person interaction to get someone deployed and set up, answer questions, even for FDEs to ask the customer questions, to get them thinking about other use cases and solutions, is invaluable. It's basically like a free proof of concept. You've already skipped all the BS that you have to get through to get the customer to commit to a POC. You have them for the 5 days. They're there. You have your talent. Really, I think the question we should be asking, Chad, feel free if you can answer this, is how can they get more FDEs and get people of the same caliber of Chad and company, and build a program, an SE learning program, that they're ramping SEs up so much faster. So then also now you got this army that understands the Palantir culture, and they also really are the sharpest engineers of the stack. Because obviously they're competing against, Tesla, Microsoft, all these places to get these, talented engineers. That would be my question: is how do they grow that?
But I mean, I think we all agree that there's a clear need for it as of today. But is that the case in 10 years, when the customer count is not?
10 years is a long time.
But
it happened in 10 years.
But the core question was, for how long can this scale? How long can this be the most efficient way to acquire customers? Because as we looked at the chart, since the introduction of boot camps, like it's really been exponentially quicker to acquire customers in the US commercial, and we have not even scaled this out like internationally yet. So who knows how quickly we will start to gain customers. But the question is like, for how long can it be the most efficient way? Because as we've talked about today, not many companies know about Palantir. Not many engineers understand what they do. Like there's a clear need for it today, but in 5 years, do you still need to sell in Palantir by showing them outcomes in 1 to 3 days? Or are there enough AIP cons, enough customer testimonies that like, no, people understand that they need Palantir and there's no need to like showcase it in a 1-day demo? Like,
I feel like you're
that's my
gonna
question.
need boot camps forever.
And
Like-
I think Chad actually answered how big the opportunity is for bootcamps, because now we are focused on thinking of bootcamps as a US commercial thing, but in reality, there's an entire world to conquest. So
yeah, AIPCon is cool, but like obviously a proof of concept, as Dom is talking about, is priceless.
I think that the boot camps may lose their necessity for the organization when you truly see this dichotomy of organizations that are having a much further advantage or gain in efficiencies by using Palantir and their software, and companies that do not, and the ones that do not will be left behind and will unfortunately either be acquired by those companies that use Palantir as their software, or they'll either cease to exist or eventually get, bought up by somebody else. Right? I just think that's just kind of the two cases that I kind of see in its simplest form here. But I do still think that boot camps will be necessary.
Well, if I can speculate on this.
Okay, Arnie, last comment, and then we'll move on to the next metric. Go ahead.
Like boot camps are necessary, and probably in 5 years, they will keep running boot camps without really expanding too many FDs. Like we're probably growing, but I think we should not expect Palantir to suddenly become a snowflake, just hiring people to grow. What I think they want to achieve is imagine more or less the same number of FTEs, slightly growing, increasing the number of bootcamps they can make, increase the number of bootcamps that can make also internationally. Great. But at the same time, having an emergent component of customers self-adopting Palantir, like something we mentioned previously, and how this can happen. This can happen in two directions. The first direction is build with AAP, which is now even for free for the developer tier entry level. And if I remember correctly, now is potentially free forever up to a limit of certain ontology objects, like computational limits. But that is how you could reach those customers that want to adopt Palantir, but maybe are still small. They're not in target for a bootcamp. I think what Palantir tries to achieve is we try to have a direct connection with the industry leaders, while also learning to deal with smaller companies. That's important, but our focus is we keep getting the leaders. And meanwhile, you have the scalable things that go through the marketplace. So on one side, the more developer thing build with AP, and into the non-developer side, the other marketplace, AIP Now, which is essentially a marketplace for use cases. Imagine that component becoming more and more accessible with decreasing need of FDs to actually help these customers deploy the solution. So now when you go through AIP Now, I love this use case. Let's go and click. You still need to have an interaction with the FDE, essentially to tailor that use case to your company. Imagine this process becoming more and more automatical. The FDE, on the other hand, becoming way more efficient into, I help you adjust these couple of things. In a couple of hours, you are up and running with this use case. That's what I personally expect.
Yeah, wanted to speak more about like the marketplace implications as you were getting into, like Fujitsu having built over 100 app themselves, the network effect, but I guess we're saving that for a different time. So back to earnings expectations. I think for the rule of 40, for just quickly for people who don't know, this is like the most common SaaS metric people look at, where you can tell like the quality of a company, where you sum up the growth rates and the profitability rates, and you can use different measures depending on if a company is mature or a startup and stuff like that. But I use last 12-month revenue growth, and then I use last 12-month free cash flow margins to do rule of 40. I know Arnie does, I think, adjusted the EBIT margins instead.
Yeah, and I did the last quarter.
Yeah, okay. Anyway, I do it on a LTM basis, and we are more or less guaranteed to stay above 40 for yet another quarter, because the comps are weak. Like we have 2 really weak comps on the last 12-month basis, and like more or less guaranteed to stay above 40, which is good, because we know that this period here had a SPAC impact boost effect, and it was really quickly to put up really easy to show like strong growth on a much smaller scale. But then we had this period here where I think a lot of SaaS investors might have been like put off by Palantir when they posted comparatively weak rule of 40 numbers under 40. But the goal is to be above 40 when you combine the growth and profitability margins. And I think we're more or less guaranteed to stay above 40, which is great. I know Matt had some thoughts on the rule of 40 earlier, so you can continue.
Yeah, Matt, your thoughts on rule of 40?
Not necessarily sure about the rule of 40, but I mean,
no, wait,
thinking,
maybe it was Arnie that I cut off when he started showing.
I think it was Arnie. Yeah,
Let's do Dom real quick, and then Arnie. Dom, if you have any thoughts on rule of 40.
I mean, they already are public. They're a large cap, and they got almost 4 billion over in assets and no debt. So I mean, obviously you want to see them go up, right? People look at that from a SaaS perspective. It shows the health of the business, the trajectory the last 3 quarters or 4 quarters has actually all been going up. I think it means a lot more for those who are trying to go IPO and show that they're profitable. You want to see that continue to grow, and that's the health of the business, but it wouldn't be my main metric that I would be paying attention to for the company, right? Like I would be more focused on how they're expanding their customer base. Are they generating more free cash flow? Those are some of the things that I would be looking at, but it is still a great indication of the health of the business going up. So yeah, I mean, I like where look at the last 4 quarters, 5 quarters, they're all going up. I just think people need to understand they're going to do it their way. They're not going to try to overextend themselves. Look how it's a gradual growth. It's not like a big rocket growth on a lot of these graphs we're looking at. And I think that's because they're focusing on a customer first sales approach that ensures that when they onboard a customer, they're not losing them. They're making sure to spend the time to get them successful. And then once they do get a couple of those use cases, I mean, look at some of these renewals. I've never seen people sign 7-year renewals. Like what? Like that doesn't happen in the software industry. It just doesn't. If you get a 3-year renewal in SaaS nowadays, it's like, wow, good job. But these guys are getting 5, 7, 10-year agreements. Like,
yeah, I think it's interesting. I definitely see the rule of 40 continuing. I mean, I wouldn't be surprised if it continues to that 43, 46-ish sort of range, just because, I think that the reason why you're not going to see it explode to 50 or 60 is exactly what Dom said. These guys are all about efficiency. And so they're not about to just explode headcount for the sake of exploding headcount. I mean, they're going to add very systematically and make sure that while they're being able to grow at, say, 20, 25, 30%, they are doing it in a manner which is keeping costs relatively flat, if not, slightly going up, versus what we've seen from competitors like Snowflake and Databricks. I'm sure if their numbers were public for Databricks, we would see that their operating costs are just continuing to explode. And I think that that's going to be what differentiates these guys going into the latter half of the decade is that Palantir's net income margin will continue to climb to the 30s, 40s, 50s versus what we have at Snowflake, where they continue to hire, and they're focusing on sales versus actual engineers and forward deployment engineers that are actually focusing on solving the business's problems, or more so just trying to sell software, which at the end of the day, it can get you fast results, but what'll get you a moat? And I don't think the answer is yes. And maybe the transfer from, say, Slutman to the new CEO will focus a little bit more about the products themselves, and you'll see a step change in Snowflake. But, you know, I think that the way that Palantir has gone about it is slow and steady, and it'll run the race.
Mm-hmm. A quick note on the deal Dom mentioned about Tampa expanding for 7 years. That was a $50 million deal, which means 7 years is already a lot, way above the standard. But since it is way above the standard, we could expect Palantir to give a discount, like normal things. If you commit for so many years, as a customer, I'm happy to do that if you give me a good price. Even with this good price, 50 divided by 7 is a 7 million per year, which compared with the average SaaS deal, that is insanely big. So that's a hint.
Well, even comparing with the average revenue per client for Palantir, it's like 2.3 million right now annually. So
Correct.
It's like huge.
Great point. So as far as I love to masturbate with numbers, with the rule of
Hold
40.
on, wait. What'd you say? Did you say I love to masturbate with numbers?
I was thinking
That's a good one, dude. I haven't heard you
self-measuring.
say that one in a while. I like that one.
You know, the rule of 40 is great, but we need to remember that's a shortcut. A shortcut that comes from the observation that if you are growing very much, as an investor, I'm okay if you don't focus too much into margins. But if you are growing less, I can have an intuition that you are doing well if you have a lot of margins. But why? The very basic reason is if you have high margins, you have potential marketing budget you can spend to boost your growth. So when you see something like this, like how Palantir did after the bootcamps, where you start increasing the speed of your revenue growth while also becoming more efficient into that growth, that's something completely an anomaly. That's why I insist so much into already this dynamic is magic. And how magic is worth, economically speaking, is hard to say. I just know a lot. And a lot more when the industry is not booming. During 2020, money was free. All companies were spending too much in IT. You would argue even stupidly in IT. So it was an easy growth. It's like when you are an influencer of a topic, that topic becomes viral. That's great for the short term, but you know that's not a sort of organic growth. It is when you grow in a context that is quite adversarial against you, there you know, oh, there's alpha here. So as a creator that we were building also audience in a context where people were not happy to talk about Palantir, here is where you have the intuition, oh, maybe there is something into these creators. And the context where we are into the SaaS context is how we were showing before. The industry is not in a good shape. The SaaS industry is not growing because there are money. So if Palantir is growing now into this context that is relatively weak, it means, my hypothesis is that if you have a resurgence of the SaaS industry with companies willing to spend big money again into software, Palantir will benefit for further tailwind that could keep up to the 30%. So the intuition I have from these numbers is Palantir cracked the code and now is set to really take a huge market share, because even if the software industry flips, Palantir is already at a faster speed.
Okay.
Yeah, like just quickly, like the reason people care about the rule of 40 is because like usually either you have a lot of growth and then you can sacrifice your profitability, but you want to add up those two to reach 40 or above to show like, yeah, we're still a quality company, or you focus on efficiency, but your growth will suffer. So like you can either have profitability or growth, choose. Palantir is like, yes, like they both, like it's so powerful. So yeah, I'm really excited about that.
So
And they like, I think as of the last 2 quarters, they are actually presenting a rule of 40 scores in their presentations, which is also interesting.
And they know that we would be so pissed off if that slide disappears now. Now, we all track that, but exactly... No, well, I was saying something. I forgot. So go.
Okay, Amir, share your screen again for the next metric. How many
No,
more do we have?
that's it. I could add
yes.
like average revenue per client, a lot of stuff, but I don't want to like muddy the waters too much.
No, that's good.
So okay, so the intuition that we can grasp from this rule of 40 is if Palantir now can grow that 22-25% while having a 35% free cash flow margin, which is huge, which means that for each dollar of revenue they generate 35%, 35 cents of free cash flow. Imagine if now Palantir combines this, which is like the organic growth into an adversarial context, now with a very well spent advertising budget just to increase awareness, because we know the box works. So the what we can call this AI box works. And by the way, like this expansion also comes from Palantir deploying internally Palantir and AI agents, as Chad showed in a recent video. So we know this box works. The only limit is awareness. So I could expect now Palantir doesn't really want to keep expanding the free cash flow margin, because think this way: what's the real benefit at this point in time to have a 50% free cash flow margin while keeping the growth steady? Right. I think at this point we will see like the free cash flow margin stay high, but I don't think too high, and we will gradually seeing Palantir trying to compensate the fact that this shit works, but nobody still knows it works. So how do you solve this problem? You try to find a way to capture viral growth thanks to social media, thanks to big events, stuff like that, big sponsorships. Like I could expect something in that direction now.
Well, what do you guys think about Palantir's historical marketing strategy, the way they spend money? Because we know that they will like get a whole Wall Street Journal page, says nothing about the product, just a short like 3-word sentence with a dot, and then like the software of tomorrow. Like, or they will have a billboard at an airport, like of a Ferrari car, and that's it. Like partnering
that's why
like,
I think I don't like any company that does that. I like any company that puts a bit, like, it's more brand awareness versus conversion. That's why I think the boot camps are so important, because like, yeah, Wall Street Journal ad gives you some brand awareness and stuff, but the boot camps is what matters. And I think that's where a lot of the money has to be spent.
The question was like, they don't really tell you anything about what Palantir does, nothing about the product. Like, I think it fed into the black box narrative. Like, people see Palantir's name and then it just says providing software today.
No, but I disagree, because even if Snowflake had a Wall Street Journal ad, you wouldn't know what Snowflake does either, right? Like I think any SaaS company that tries to advertise like that, unless you're like Microsoft, no one knows what the fuck you do, right? Enterprise SaaS is boring to most people.
Yeah, I'm not saying like that's good, but I'm saying like
exactly the boot camps. I mean, at the end of the day, what drives pipeline and SaaS and actually getting the product so good? If you get the IT team or the DevOps or data scientists get their hands on Palantir Foundry, you automatically are going to get interaction back and forth. And then on top of it, you plant a couple current customers in those boot camps, and they say, hey, you're in insurance too. This is how we saved X amount of monies with Foundry and the return on investment. I mean, it's like a no-brainer. Like, Palantir's not selling it. It's the use of the product is selling it, and hearing from their peers in their industry is selling it. That's how you sell it enterprise the most effectively.
Basically, I think Amir's question is, what do we think they should do going into the next 5 years?
I wouldn't spend, I don't know how much they're spending on billboards and things of that sort, but I wouldn't spend money on that. I would spend money on.
Do you think there's any value to pure brand awareness, Dom?
I'd rather do webinars, do sales webinars, show the product, you focus on, we're not, it's not a B2C company. So, you know, it's not like a CIO or CEO goes and he's in an airport. Like, I was geeking out because I follow Palantir and I saw the Ferrari ad in the airport, but it's not like a CEO's gonna be like, oh, I should give them a call. You know, it doesn't work. Like, most people now in software who do their decision making and buying, they've already done 90% of the research on their own. They're coming to beat the supplier up about price and everything else. But a lot of people don't know about Palantir. So
I think the hard part is exactly what you said, Amit. It's hard to describe what Palantir does. It's easier to kind of demonstrate what it does.
Yeah.
But I think the real place that Palantir can dive deep that will really drive an impact for the company is specifically talking about Ferrari, right? Showing up on F1 weekends to different places around the world to talk to people and get in front of the cameras and have them explain. And so them showing up on like F1 TV or something like that, I watch F1 every weekend, right? So it's like if they were to show up, if like Chad were to show up, I'd freak the fuck out. I'd be like all geeked out. I'd be like, oh my God. And then same thing with, you know, them working with Airbus. If they show up to these international air conferences and really help explain to people how they're making that step change difference. And, you know, and I think they're doing that to an extent, right? I mean, they're showing up to a lot of these conferences and trying to get their foot in the door, but you know, it's hard. And I think that that's part of the reason why they are creating these billboards that are so simplistic and something like associating themselves with Ferrari, because everyone knows what a Ferrari is, right? And so if you're seeing that brand awareness coupled with Palantir, it's like interesting, is that's what's causing them to kind of come back from, specifically for people that are interested in F1, you know, them to kind of come back to the front of the pack because they were kind of struggling. And at the same time, it's also about us getting it into people's minds and brains. And over time, people will start to recognize and it'll become a household name. And I think that that's what's more important. And it's not necessarily about showing the average person, because the average person, I don't think, would really care.
You know, it's so funny, speaking of F1, just quickly, like 2 weekends ago, like basically every F1 team has more or less every F1 team has a major tech deal or tech sponsor, tech partnership. Like we know that Oracle is with Red Bull. And then funny enough, CrowdStrike was with Mercedes, which is like the biggest team, perhaps alongside with Ferrari in terms of like the richest company on the grid. And their computer systems were down during free practice 1 in 2 weekends ago. So I tweeted out like, well, the Ferrari that partners with Palantir has their systems up and running. It's like so embarrassing for like that F1 team, like not having computers up and running for like a session. It's like brutal, like really bad advertising for CrowdStrike.
Well, look, since the problem now is in the awareness, I don't think it would be bad to insist or even become more aggressive, especially now that Palantir has the capability to deal with demand. Because imagine the same question was 2 years ago when there were no boot camps, the product was way less scalable to adopt, to expand. But
I remember 2 years ago when there was nothing, I was like, we need to make a TikTok account and make short videos. Like we got so desperate. I was like, let's make it. Dom, you remember you were on that episode. I was like, let's make a TikTok account.
It's like, funny. A lot of the stuff we said 3 and 4 years ago have come to fruition in some form or fashion.
But once you have this sort of ability to capture and increase demand, I think it is worth just to push the awareness. Maybe how they push awareness, I would make it slightly different, because they made the advertising in newspapers, like we power the companies that power the world or something like that. Like it was for Kindergarten, no, not Kindergarten, Kinder Morgan, or other PGE, like these kind of companies. That's great. Personally, show me like we make Airbus 33% faster in producing these. Like, that tells me something.
From the recent event they had, where they like, as we talked about last week with all the outcomes, like put that in. That's way more powerful and effective.
Look, now you have this CrowdStrike situation. Okay, go and find like something viral. It's like, oh, you actually didn't. You didn't really need the CrowdStrike. So
Or
you could have.
right?
So like at this point, they are in a position of strength where they can really make fun advertising while shitting on others without being explicit, but giving a strong message. It's like you don't like be up and running in your most important thing, doing your moments, and try to trick that.
So Chad said in the chat, look at how Tesla advertises, which I agree with them. That was one of the things these boot camps do. The product speaks for itself. However, I would love to hear what he says if he's still on. I would push back on the fact that I would love to see Sham present at a AWS RSA event or something where he gets to keynote and show the power of Foundry on a keynote stage where most people gather for one of the largest, IT conferences. That would, and then maybe there's a talk where he gets on with, if they're doing it with Microsoft, talks with Nadella and how they partner or whatever. But just those keynote pieces where people get to see it in action and understand what Palantir is, because you got all the eyes on it. That would be worth spending a little money to show up at some of those conferences.
So basically Jensen on stage with the Snowflake CEO, you think something like that would be?
Yeah, it works. It does. It really does.
I think it's coming sooner or later, because we have all these like this hyperscaler debate where different hyperscalers needs to justify their clients to keep spending more and more on data centers and stuff like that, cloud infrastructure, compute. And in order to do so, you need an actual reason for them to require all that compute. So that's where I think like Palantir is starting to be pushed more, as we saw with Microsoft, for example, on their earnings call. So I think that's going to continue. So sooner or later, we will have Carp up there speaking to someone. We will have attendances for their conferences and stuff like that. I think it's just a matter of time. And as you mentioned before, a lot of the things we were discussing years back are actually starting to happen now. I think like more or less everything that CodeStrap ever wanted has actually come to fruition. Like the marketplace, the dev focus, like all that stuff is starting to happen. So I think it's just a matter of time. But I agree with you completely now.
So you see, he's a real influencer.
So let's end on, or Arnie, go ahead, finish your sentence.
No, I was thinking again of the question how Tesla advertises, and I got a pop into how I started really liking Tesla back in 2015, 16. And one thing that struck me was that on YouTube, they were making videos that were so cool that even like I was not going to buy the car. Like I literally loved playing the video all over again. And at the beginning, Palantir was really pushing into the video direction, very cinematic stuff. But at this point, I think they are like they're making videos for like more developer stuff. Chad is pushing greatly into showing use cases. I think now is the moment to bring back that awareness component. And what I would personally do, since they also have a great team making very good looking videos, is a sort of clips of problem. This is how Palantir solves the problem. Do you remember that very cinematic little movie of the electricity grid going completely burned, causing essentially a collapse of the entire city?
They never aired that commercial, and that would have been such a good commercial, man. That would have been awesome.
What I would do in their position is finding the the theme that clicks with clients. Now, for instance, a potential theme is F chatbots, like that are useless, essentially, go beyond chat and show like 2 minutes clips, 3 minutes clips of problem, solution, why that chat potentially doesn't solve anything, but with an AI agent, you can really like poof, step up and show visually output that makes you think, oh, like if I deploy this stuff, I can actually increase output. And if you can do that, like imagine something like cinematic 2-3 minutes videos is something easily shareable on LinkedIn. Imagine employees would be crazy happy to share. Now we have 4,000 employees. We have a community. Imagine the viral effect of doing something like very simple, but very clear, very effective into every industry. So energy grid, okay, there's a problem if you don't deal with a breakout very fast. AIP, how that solves the problem. You go into construction. This is the problem. This is how AIP solves that. So you make like a very strong video under the same theme, which could be like go beyond chat. Problem, solution for each vertical, so that, okay, you talk with a client into health science. Okay, what the heck do you do? What Palantir is? Okay, you see
But
this.
they already do that a lot, don't they? Like there's a lot of like, okay, sure, they have these commercial types where they give a scenario. I think mostly we had the Gotham ones where like, oh, there's submarine in this sea, how do we respond and stuff like that. I think Gotham had more, especially with like the wildfire stuff like that. But we also have like a lot of client-based ones where they talk about healthcare and stuff like that.
Look, but that is a client-specific thing. I would go more into something that can go viral, like Concordance is talking about how they use Palantir. That's not something that goes viral. And I told you a problem I had, for instance, literally this night or last night, depending how you consider it. I met two friends. They are both into software, like not very sophisticated stuff, but still software. They didn't know anything about Palantir. And to explain what Palantir did, you know what I did? In the government side, I showed exactly that Gotham video, like that decision-making video with Taiwan. That's still, so far, after 4 years, in my opinion, the coolest Palantir video. And that is like, that gives you the intuition of, okay, what's the problem? What's the solution? If I need to show, okay, a cool, nice video of what is Palantir, Foundry, and AIP, there are thousands of videos. I can't think of, okay, this is the video I can show.
Yeah, I can agree with that. Yeah.
Okay, let's do last question, and I want the chat to participate in this as well. Palantir earnings on Monday. If you were an analyst on the call, what is one question you would ask the company on the call? You could take 30 seconds to think about it in the chat as well. What's one question you would ask that make it a good question? Obviously not when dividend. Probably not that one.
That was my question.
Try to make it something.
When buyback.
Yeah, try to make it something you think they would actually answer. Like, and don't say conversion on AIP boot camps. That's,
well,
they're not going to say that.
The question
right?
I had to you guys regarding boot camps, like for how long can it scale? For how long will this be the most efficient way to?
That would be your question. That would be your question, really?
Yeah, I think like what else? Like everything is moving into the right direction. I will be proven wrong in 10 seconds when someone else has a better question, but
I think that's a horrible question.
Okay, This my question would be, why aren't you allowing analysts to ask you questions? That would be my question.
Okay, a real question, not just that type of question. Look, I'll go first. My question would be around international government. I would be very curious. We know they got a new $5 million contract with Bavaria in Germany. Maybe they can't give me the best answer, but I would be curious. Hey, I know U.S. commercial is the majority of the growth. Is there sort of at least an idea in terms of the company's approach to international government? Because that's a big market. NATO is a very big market. And obviously, countries have been pretty hostile towards Palantir. So what are they thinking about? Maybe they just say, yeah, it's a wait and see. Bavaria came around. Maybe we're going to wait until France comes around. But that would be my question, at least.
And you'd be wrong because international is growing faster than
yeah,
US.
but it's not like it's not a lot.
Well, for the government
compared
side,
to
it's
US.
still almost all US based.
Yeah, it's like 85% of the revenue.
Yes. So now probably a little bit less probably, but still is clearly the dominant one. In the commercial space, Palantir had this peculiarity of initially being almost all international, and now my question would actually relate into, okay, we know Europe is very late to adopt new technologies, but do you consider Europe kind of doom, or we need to expect the international side to be still sustained, not maybe due to Europe, but maybe by growth in South Asia, like Japan?
So your question is international commercial growth, essentially.
Yeah. So
same as me. So you and me basically would ask an international question. Dom, your
I
thoughts?
would like to know what their channel strategy is to scale their business wider. Is it walk me through how you would scale through the channel, or if that's an option, or if not, then is there a plan to expand on FDEs even more to keep getting growth?
Okay, Matt, any question you would ask?
Sure. I think the one thing that I think a lot of people forget, right, is that they continuously reinvent the business, right? And they continue to create different operating systems for specific uses, right? So they came out with Foundry for the operating system of Modern Enterprise. Gotham's been used for global decision making. Apollo's been used for software deployment. AIP is kind of that enterprise autonomy piece of the organization that fits on top of all three of those things. I guess my question would then be, how many more systems are they working on, operating systems, that might have been initially developed off of Foundry or Gotham that are now sufficient enough where they can be standalone on their own, that might be, a pick upable item like a Foundry, Gotham, or Apollo. And so how many of those systems are, kind of coming down the pipeline? And then two, when can we expect something like that? I think what people fail to recognize is Palantir generally every 18 months releases a large product, right? When we first started this journey with the direct listing, it was really Foundry and it was really Gotham. And since that point, we've been able to get Apollo and we've been able to get AIP. So now that we've had AIP for the past 12 months, when's the next big piece of kit dropping, right? And I think we get little inklings and little breadcrumbs of things that, layer on top, like FedStart and many of those other things that help, and FedRAMP, and a few of those things that really help with the deployment of some of the old operating systems. But I'm sure that they've worked with enough people and enough industries at this point where they could release probably 4 or 5 different additional ones that would really be key for specific industries.
A couple of observations. I think we will realize that Palantir has reached that point of okay, now we can really inflect when you will have analysts understanding the ontology. I think the ontology is something that is relatively hard to grasp for Excel maniacs like analysts, which live in a life of rows and columns. And the second observation is what happened this week, where we had Richie, our lovely Rishi, essentially reiterating, oh, this company is worth a shit, is worth $9. I would say, okay, good luck trying to get there. But the more important stuff is we got 2 analysts that were very bearish, especially one of the 2, that both raised their targets to 28. And one in particular is the guy from Citi, which is the guy who, when Palantir was at around $6, just before the first gap profit Palantir showed, just the day before, 2 days before, he reiterated the sell rating at $5. And he was one of the most skeptical guys on the street on Palantir. And he released this note after he went to the headquarters. And from that, he uplifted very much the target prices. So it was like in the past months, he increased the target if I remember correctly, at around like 22, something like that. So he needed to catch up with the story because essentially he was wrong. But now he's even confident. So that's probably one of the biggest signals that
Him
we got
and
so far.
Jeffries raised us to 28 on
Jeffries.
Yeah,
momentum.
yeah, but aren't the notes like kind of still messed up because they're like, well, okay, 28 price target, but we don't think they deserve 28. We still think it's expensive. Like, aren't there like still notes like that?
It's the weirdest shit. They're like,
they're
hey,
like, well, we don't want to be left behind, but we don't think this makes sense. So like, no, you still don't get it. Like, what?
And
like, what kind of price target is that? Like, price
as
target
a classical analyst,
28, but it's expensive. Like, what?
Look, what analysts do when they're confused is just follow the consensus. And here, I think they are realizing that Mariana Danives are essentially the two analysts that know what they are talking about. So that's why, okay, Danives is maybe a bit too aggressive. Let's track casually the Mariana stock price, which is 28.
Yeah, Mariana's the one who gets it, but like Jeffrey's coming out 2 days ago saying we think it's super overvalued, but 28. It's like what? It's like how do you tell an institutional client, yeah, buy it, but if you're buying it, you're probably going to lose money because it's overvalued. But we think
it's only super overvalued if your estimation is you want your immediate gratification and money now. I mean, the whole point in talking about valuation is what do you think it's going to grow into? Some of the best companies in the world have held high valuations for decades and then finally grown into them. So what does it tell you from a sentiment if something has a high value? That there's a lot of belief in the market in that company and the promise of its growth.
Yeah.
So, I mean, look, it has a 186 PE, but the forward PE is 73. I mean, give it like 2 more years and we're going to be talking about like a PE of like 35.
You mean someone like Amit that just focus on today and ignores the future and called my question stupid because I want to know about the boot camp scaling?
Your question is stupid. Your question is
for someone that values companies. It's
your question.
Like
hold on.
very important question.
Your question was, when will you not do boot camps?
No,
as an investor, would
I'm
be
saying when
stop.
will it stop being the most efficient way? It means there's a better way to do
no,
it.
But the reason
it
I'm
has
saying
huge margin implications, Amit, but you might not understand that because you focus on today.
So 2 things. Number one, obviously it has margin implications because you have to pay money to be able to build the boot camps. An answer to that real quickly, as Carp said, it's not about the money on that. The ROI is so huge that it's really about the manpower. Number 2, I'm not a enterprise software expert like Dom is. I cannot imagine another go-to-market strategy that is ever going to be better than boot camps. My TikTok idea in 2022, yeah, that's not as good as boot camps. So to ask a question of, hey, when are you going to move beyond boot camps? If I was Carp, I would be like,
it's not.
Why the fuck would we move beyond boot camp?
Yeah, and
I'd be like, get this guy out of here.
Why that would be the most efficient way to keep doing it? Like, it's an open question. It's not like steering them towards a specific direction to get a specific answer.
No, but Amir, you understand the value of boot camp, so why would you want any other way, even if it's a little bit more?
I'm not saying I want to. I'm saying, like, for how long can it scale?
That's why it's a
bad question. Are we gonna have 2,000 concurring boot camps in 5 years' time? Like,
we should have 5,000 concurring boot camps.
I'm in this line. If with
it's a bad question.
More or less the same number of forward deployment engineers, you can scale the number of boot camps or just keep increasing the scale of each boot camp. I think we can go very far.
Dude, selling software is hard. I've never personally done it, but it doesn't take a rocket scientist to figure out if we get you in a room and we show you a use case, it is easier to get you to buy the product. So to me, even if that costs more money, like if they're getting Tampa General to sign 7-year deals because of these boot camps, like that's a no-brainer to keep that going.
Yeah, I agree. I'm not contradicting you here. By the way, if you just quickly share my screen, I think this is a very peculiar. If we look at the geographical contribution of, should I zoom in a bit more?
Yeah, just a little
bit. We can't see a lot of quarters here, but actually international is taking more share of all the revenue. Like, it was only 60. Oh, this is my bad. I looked at the wrong quarter. embarrassing. It's early. I looked at Q4 when they actually
What was the
started
point you're trying to
losing.
make, though? What was the point you were trying to make?
No, I was just because Carp has always spoken about how weak international is, that Europe is behind. We don't know about Asia. We don't get many comments about Asia, but in general, the consensus was that international is not growing as quickly as the US.
Yeah.
So they are pulling staff from the European markets instead of focusing on the US. That was the narrative. But when he spoke about that 2-3 quarters ago, I was like, well, international is growing faster than the US. But I looked at the wrong quarter. This was Q4 of 23, so 2 quarters ago. They actually grew 4%. So from 60 to 64% of all revenue was from the US. But they were dropping, like international was growing faster. So that's why I thought it would be interesting to show, because both you and Arnie were wanting to ask questions in regards to international. But never mind. Embarrassing. It's early. My excuse. 3 hours of sleep.
Personally, I would love to actually hear more about Japan and South Korea, because we know we got very big clients like Fujitsu, like Sompo, and this is a screenshot that Lord Grimm shared me about Palantir and Fujitsu, and it's like we are benefiting with 1,500 users with organizing within our organization. By combining Palantir Foundry data integration capabilities with Fujitsu, we achieved an annual cost reduction of over 9 million over 3 months. So if we analyze this, that's crazy. So we are talking almost to 40 million dollar annualized, which means, by the way, intrinsically, that for these 3 months, Palantir could have charged like 3 million, and Fujitsu would have still got 3x the output.
Yeah,
so
and
it's a good return. So that doesn't mean in 1 year we got like a $50 million deal, but that's the premise to actually get these insanely big deals.
yeah, and also it's written here as well, but they said it during AIPCon as well, that they've in-house developed over 100 applications themselves. When people start to understand how powerful that is and start to utilize the marketplace that Palantir has set up, we're gonna see some crazy network effects.
And I would
Arnie, I was going to ask you, Arnie, how do you handle? Do we need Foundry for your tabs? Like this is a lot, dude. This is like
being an analyst.
You navigate a lot.
When I was working as an analyst, I even had more.
I love it.
Essentially, my job was navigating through tabs.
All right, we'll see. Right, see Monday. See what happens.
Monday. So Arnie will be live with me, I'm assuming, right after hours Monday.
Yep.
Amir probably not. Dom probably not.
I can come if you want.
You can.
If I'm not welcome, then
Do
No,
we
you're
want
welcome.
him?
No, of course we want Amir. We want Matt. Matt, I think you're off that day, so maybe you can join.
On Monday, this upcoming Monday.
Yeah,
I can be home for the afternoon. That's not a big deal.
Okay. All right. So we're gonna have a
You
full
may
house.
be able to join.
We
if
got
it's
the
after
team.
hours.
we got a team.
All right, we got folks. This is gonna be fun. We'll see what happens. I know we're all gonna be looking at the stock, but obviously the stock's had a good.
Do you
run
know
already
what
this
would be
year.
sick, Amit, with all your connections being at the AIPCon and stuff? Imagine during the actual earnings call, Amit gets a direct line while live streaming to ask a question to management,
That'd be cool.
line to line. That's
Cool.
would be.
I would choke.
Make
I
it
would
happen.
choke. I wouldn't be able to get the words out. Dude. I'd be like, hello. All right, that's it. We'll be back Monday. Thank you all for being here, and we'll see you on the earnings stream. Bye, everyone.
Yo.